What's up, YouTube? Welcome back to another video. Welcome back to another educational video. All right, this time, guys, we have a huge video. So we're going to be talking about supply and demand. I know, supply and demand in 2025. Yes, it still works. Okay, trust me. Now, before I start this video, guys, don't forget you can join the Discord for free, right? I do have a public version of Discord where, honestly, this setup right here that you're seeing on GU, I sent out for free. You can see these setups in the Discord, right? The only part that you're not going to be able to access in the Discord is the mentorship and the private videos where it's more advanced teachings, right? That's the only thing that you won't have access to, but pretty much you have access to everything else in the community, our library, everything like that. You'll be able to see my trades, and you'll be able to join our live calls as well. So there is a lot of information. There is a lot of gems that you can still pick up with the free public version of the Discord. Just click the link in the description and you'll be able to join. All right, now supply and demand. Let's get straight into it. You guys can see here on GU, it's going to be what we're going to be looking at. Look at some other pairs as well, and I'm going to give you guys the rules and what you should be looking for and how you should be looking for supply and demand. All right, so we're going to start with GU and we're going to go to like a blank. Getting right into it, guys, we're on the daily time frame here on GU. Okay, we're on the daily time frame. As you can see, the first thing that you need to do before you start looking for supply and demand is you want to find out what is the directional bias of the market, right? I usually start on daily time frame, so we're going to mark it up here. So we have a bullish structure from this low to this high. We see the market pulled back, and now we have a new low creating a new high. So now our next leg, right, our next structure leg is going to be from this low to this high. Okay, and the reason why I'm drawing this fibs is because the fibs gives us our premium and discounted pricing. It is important that you understand where you are at in the market. If you are in discounted pricing, you want to look for demand zones to buy the market. If you're in premium pricing, you want to look for supply zones to sell the market. But also that also depends on your structure. So here we have from this low to this high, to this low to this high. Now we see the market pulled back all the way into the 80%. This is extreme discounted pricing. Okay, extreme discounted pricing. It doesn't mean we're going to trade the daily time frame, right? When we get on the daily time frame, when we're looking at these directional bias, doesn't mean you're going to trade it. You just want to understand where you're at in the whole grand scheme of things. Okay, now that we understand that, now we can go down to the 4 hour. Usually I just skip all the way down to the 1 hour because the 1 hour is where I do most of my trading. Okay, so now we understand that we're in discounted pricing. So before, as this market was going lower, you can see this market is trading off of supply zones, trading off of supply zones, trading off of supply zones, going lower, right? We can see we have a bearish market cycle going to the downside. We can see the market is creating new lows going lower. So as the market comes lower, you can see that we are getting into discounted pricing. Anything above 50% is premium pricing, right? Anything below 50% is discounted pricing. In a bullish market, which we are from this low to this high, this is a bullish structure. When we get to discounted pricing, this is where you want to look for your buying opportunities, or anything underneath 50%. But there's more that goes to supply and demand. Okay, now let's get into the specifics. Once you have your directional bias and you know what you're looking for, if you're looking for a demand zone, what are the correct demand zones? So here on GU, what I want you to pay attention to is, where is our last structure point? We're on the 1 hour time frame. This is the high that creates our low. So this here is our latest area. Now, any supply or demand zone, here are the rules that you're going to need. One, you're going to need a manipulation, a liquidity grab, right? Liquidity grab looks like this. Any type of liquidity, let's say we have a range, liquidity at the top, market takes the liquidity before going lower, right? That's the first rule. We need some type of manipulation of a high, any highs. It doesn't have to be equal highs. It just has to be any high, right? Just some type of manipulation. One, you're going to need a liquidity sweep, which happens right here, right? Look at this high, boom. The market takes out these highs right here, liquidity sweep, boom. That's the first rule, right? One, liquidity sweep. Two, you are going to need a break of structure. It has to be an external break of structure. meaning it has to be a verified low. So 2 right here, you need a break of structure, and also change of character as well, which we're going to talk about in a moment. Change of character, break of market structure, anything, right? So 2 right here, BOS, and 3, right? The third thing you're going to need is imbalance. You're going to have to see some imbalance here, and we have imbalance here, right? We like to see imbalance inside of this move to the downside. Why? Because that shows momentum, right? So 3 is going to be momentum slash imbalance, right? Momentum slash, well, that's ugly, but you guys can hear me, right? Momentum slash imbalance. And the reason why is because we want to see aggressive pushes here. You guys can see how this market is aggressive towards the downside as we're pushing lower. That's what you want to see. Even here, and we're not going to talk about this area, but even here, you can see the market took out these little highs here. Here's our aggressive push to the downside. Here is our BOS, right? So we have 1, we have right here, we have imbalance. So that's another rule that's confirmed. And then we have our BOS down here. And where is your supply? Your supply is going to be the manipulation, right? So boom, that's going to be your supply zone. And you can see the market gave you a reaction here. So we gave a reaction before we went higher. Okay. And one thing that I want to say about supply and demand and how you want to do this, every single area is not going to create a new low. Okay. And why do we understand this? Well, look at where we're at in the market. This is why when we zoomed out, we need to understand where we're at in the market. We go on a higher time frame, look at where we're at, right? We're in extreme discounted pricing. That means the time for you to sell this market, the time for you to look for supply zones has already passed. That should have been here, right? When we gave this change of character, you can look for supply zones to take this market lower until we get underneath the 50%. Why? Because, buyers are not going to be aggressive in premium pricing. It costs too much to buy the market at these levels. You want buyers to try to buy this market in discounted pricing. It's going to be more optimal. You're going to have higher probability setups when you're looking for demand zone in discounted pricing. You're going to have low probability setups if you're looking for supply zones in discounted pricing, right? So buy the market low, sell the market high, right? Going back to that same thing that we heard as we all started trading. Okay, but there's more to it. So you have 1, you have 2, you have an impulsive move to the downside. Now let's drag this to the left. And what do we see? So if I make this area bigger here, and I'm gonna go on a daily time frame because I want to find this specific candle. And that's usually what I'll do here. When you're looking at your supply and demand, the main thing that you want to do is find the original move. Where did this market start going higher, right? What was the price action that gave this push? And it all started right here. So if we make this bigger, boom, here is our supply zone. Boom. That's your supply zone. So now that's how you identify your supply zones. Boom. And we're going to give more examples. So now you can see here, market gives a reaction, you get a push lower. Market gives another reaction, you get a push lower. Here's our 2 opportunities for sales on this supply zone, right? So the thing about, like I said about these supply zones, is not every supply zone is going to create a new low. Why? Because you have to understand where you're at in the market. The reason why this supply zone did not create a new low is because of where we're at. We're in discounted pricing. Sellers are not as strong here because we have buying pressure in discounted pricing, right? Buyers like to buy the market in discounted pricing. Everyone likes to buy in discounted pricing. If you have something that's 30% off when it used to be like a lot of money, you're going to want to buy it because it's at a discount. Same thing that goes up, the same thing that applies to the charts, right? You're not going to have as much sellers here trying to sell this at discounted pricing. They want to sell it at premium pricing so they get more money for what they're selling. Okay. Basic economics. All right. So as this market is pushing higher, you still, even though that we're in discounted pricing, you still have opportunities for sales here, guys. I want you guys to see how strong these areas are and why they're important. Now, to be honest, you can just take a sell limit from this area, right? Let's say you're just taking a sell limit. I know the stop loss is kind of big at 72 pips, but look, you're risking this supply zone, and let's say you're only targeting a 1 to 3, which is what I target, right? I'm only going for a 1 to 3, guys. Off of these supply zones, I'm only targeting a 1 to 3. So you took this entry, stop loss at this high, TP hit, trade done, right? You're done. You're out of the trade. I don't like to take multiple mitigations from the same supply or demand zone. All right. Now, let's keep going. Let's keep talking about this market, because we see that we broke this high. Now that we have broken this high, we have invalidation of supply. When you see invalidation of supply, that means buyers are taking over the market. So when we see that and we see the market break this high, above this high, we're looking for buying opportunities, right? So we're going to zoom into here and we're going to ask ourselves, where can we buy this market within here? And I think there were some buying opportunities here as well, but I wasn't looking for buys until we broke this high right here. So once we invalidate a supply zone, we start looking for demand zones after that to take this market higher. Why? Because sellers were not strong enough to take this market lower. And also, we're not going to be selling from any of these areas here because the market has liquidity above here. And that's another thing. This is why we wait for a liquidity grab. We wait for a manipulation, because we do not want to be selling the market where there's liquidity, right? Because the market could easily take us out. So we want to be buying into this liquidity to take out these highs. So after this supply zone gets invalidated, there's no other valid supply zone here because we have liquidity here. All right, so we want to be buying the market into liquidity. Now zooming in, how do we buy this market? We're going to look for the same thing, guys. Liquidity grab. So where's our liquidity? Here we go. Have a whole bunch of liquidity here. Trend line liquidity. You see low, low, low. None of these lows have been taken out. The market raids these lows. So here's our first rule. We need a liquidity grab. Here it is. Boom, check. Our second rule is we need to break a market structure, a BOS. Check. Here's our BOS / BMS. BMS, BOS is all the same thing. Break a structure, break of market structure. It's all the same thing, guys. So BMS, BOS, change of character, all the same thing. All right. So here, boom, we have the market create that break of structure. Here is our demand zone now, right? Demand zone means you're looking to buy the market. Supply zone means you're looking to sell the market, right? You want to sell on supply zones, you want to buy in demand zones. So since we are looking for demand zones now because we invalidated this high, which was our supply, this is where sellers was holding this market to the downside. This is where that we seen our last point of sellers, and because we invalidated that supply, even though we got reactions, the market still invalidated that. We're not going to be looking for demand zones. We're going to be looking for buyers, right? We're going to be looking for buyers' interest. So we have this demand zone here. You draw that out. Look where the market taps into with a wick right here. Demand, right? We tap into this area here. So we have all our rules met once again. We have our manipulation of these lows. We have our break of market structure. We're following our trend, and now we're aligning with our higher time frame. So now our demand zones become even more higher probability because we are aligning with our trend on the higher time frame as well. Okay, so when we zoom in here, we also have our imbalance right there, which you can see the market reacts off of, but we don't trade off of imbalances, guys. We just want to see the imbalance. We want to see the imbalance because that shows impulse in the market. Imbalances just means that this right here, there was so much buying pressure here that no sellers were able to get into this market right here. And the market needs to be as even as possible. For every buyer, there has to be a seller. So this is why the market comes and tries to fill this imbalance with selling orders. Okay. Now we have the demand zone here. You can see the market, even though the market reacts off the imbalance and we push higher, this demand zone is still valid, right? We didn't tap the demand zone. Look, the market comes right back, and look where we mitigate. We mitigate the demand zone before we get another push. And look at the next push, because this is going to be our next entry, okay? And this is basically me breaking down the GU that you've seen earlier. What do we have again? We have liquidity, so we have Asian lows, and we have these lows here from New York from the other day. Boom. Here's our manipulation. This whole area is the manipulation. So we have, and here is our change of character. Well, and if you're in the Discord, you know why we're able to take this trade here is because we're seeing an accumulation inside of a demand zone, which is a confirmation entry. But this area itself is a demand zone because we have a manipulation right here. We have an impulsive move. So we're seeing the momentum, and we have imbalance inside of this, which the market comes down to fill. Here's the change of character, right? That's our BOS, the break of the high. We're already bullish, and we're already in an entry here. And the market comes lower, mitigates, and now we have our next push towards the upside. Now we broke this high. Boom. Okay? Just to show you guys, this was called in the Discord, right? You could have publicly seen this for free when we sent it. I had this focal point right here, but as you can see, this area here is that demand zone where we're looking for the opportunity. And then to update it on the next day, boom, here's that. And then here's this entry that was sent out the day before, right? After we got that mitigation, you can see we have that push. Here's that next area that for that entry to take us higher. Okay, so that is how you want to look for your supply and demand zones. And just to give you guys a little bit more, an extra treat for you guys, let's go to GCAD, and I want to show you guys something. So we're going to start with this area here. We're going to start down here. So the first thing I want you guys to notice is this area here, this high. Why is this high important? This high is a supply zone. Why is this a supply zone? Let's go right here. As you guys can see, why is this a supply zone? Look at the structure, right? The market is going lower, going lower. So this is the supply that broke here. Why? What makes this a valid supply zone? Let's zoom in. We have our manipulation, right? We have our liquidity sweep of the highs. We have an impulsive move to the downside. We have clear imbalance, and we created a break of structure. That makes this area a valid supply zone. You see, when the market comes into this supply zone, we still get a reaction. We get a reaction to the downside, but we end up invalidating that. So the same thing that we did on GU, we're going to look for here on GCAD, right? After we invalidate a supply zone, we want to look for demand zones taking this market higher. So now what do we look for? Let's look for our demand. We have a sweep of liquidity here, and that's all you're going to pay attention to. Where is the sweeps? We have a sweep of liquidity right here at these lows. In a bullish market, you want to see the lows get taken out, right? So sweep of liquidity, market goes higher. Here's our BOS at this high. Boom. We barely miss it. Barely miss it. Look at the next day. What happens again? Asian session right here. Market sweeps the lows again. Boom. Here's the high to this low. There's your trade on your demand zone. And let me make these areas of demand. Boom. There's your demand zone. Boom, there's your demand zone. Market missed this area, but market tapped into this area. So what do we have here? Manipulation, impulsive move, break of market structure. Market comes back, we mitigate this area, that's your demand zone, market goes higher. Next day, same thing. Look at all these lows. Here's the manipulation right here. You see the market moves impulsively to the upside. Here's your break of structure, this is your next demand zone, right? This area here is your next demand zone. Market respects it again, and we explode. Okay? So that's it, guys. It's that simple. Okay? It is that simple. Don't overcomplicate your trading. If you have any questions, any concerns, anything you need to ask me, if you have problems joining the Discord, please let me know. I do have my Instagram down in the description as well. If you can't reach me any other way, let me know what type of videos you guys want to see next, and I will see you guys in the next one. Peace out.